Hello and welcome to Ventures. I'm excited about this episode with Aryeh Sheinbein. He is an incredible manager of wealth, entrepreneur, thinker, also fellow Web3 enthusiast. He comes from private equity and venture capital and now advises entrepreneurs in an extremely unique way that a lot of traditional wealth managers and finance folks aren't able to do. And so we dive into that in this episode. And I think just importantly, high level, we talk a lot about in this show about how to create wealth via venture building and venture investing. And we're so bullish on the ability to create value for the world, like in Web3. That's why we're talking about Web3 a lot in this show. All these new markets where you as the entrepreneur can create value, you can build businesses, you can generate multiple different types of income streams for yourself. And in this episode, we talk about different active or passive, sort of the spectrum between active and passive in investing and venture building. So we talk about that a lot, but we don't have a lot of resources about what to do after it's working. Even if it's working to some degree and you're generating wealth for yourself, what do you do? How do you think about investing as an entrepreneur? How do you balance between the different types of saving and charitable giving and investing versus investing in yourself or the businesses that you have, et cetera, et cetera. So a lot of topics, very important topics, and I'm really excited to be able to share this episode with you. So if you're listening, you can also watch by visiting wclittle.com. There I'll have more extensive show notes and different links and things that we talk about on this show. And if you're watching, of course, you can also listen anywhere that you get your podcasts. You can just search for Ventures. So with that, please enjoy this really great conversation and let's dive right in. All right, I'm excited about this episode for a ton of reasons. There is so much misinformation out there about wealth creation and what to do with wealth as you're creating it. And obviously this podcast is all about venture building, venture investing, the creativity about finding a different way to make things better for humanity. So I'd love to just start and just learn a little bit about you and kind of what got you into what you're doing now.
Yeah, sure. So name's Aryeh Sheinbein, right? And I went the traditional path of going to college, getting a degree in finance. And, when I graduated, the thing, like if you wanted like the most prestigious finance job, it was investment banking. And, it's kind of funny, right? We're sitting here at the end of 2021 and that job 20 years ago, people would have been like, I don't even know what that is. Whereas today, that is the headline meme of, like tons of people, right? Like people joke about that job and so many people who didn't know what the hell that was may not know what it is now, but they've heard of it. Right. Versus 20 years ago, that was the case. So I got into investment banking and I knew it was much more for me going to be a skill set building role.
Yep.
And it was pre-days of like things getting outsourced to other countries. So you actually did the modeling, you actually learned skill sets that were usable and tangible later. Not just PowerPoint, please fix. So, and after, whatever, 2-3 years, it was probably somewhere in between 2 to 3 years, I decided like I had enough. And I went into early stage venture investing at a small New York City venture capital firm. Now, the New York City venture industry today is not what it was back then. It was let's call it thriving relatively. But now it's a massive, industry, whereas, 20 years ago, it just wasn't. And so, after a bunch of years there, I really learned, like having spent some time on the public markets, having spent some time on the private markets and kind of going back to the investment banks for a little bit here and there. I ended up working at a number of large private equity firms and hedge funds throughout my career. And even today, I consult for a lot of these guys to value businesses, value the investments in their funds or their businesses that they have or are going to make or what have you. And, the industry has totally evolved. But along the way, I've done different things, personally, in the sense that like I got involved in e-commerce very, very early on, learned online marketing and how really the customer relationship was so key. But the thing that really helped me was because of my, let's call it career, my day job in the investment space and understanding businesses and understanding the financial side. It just helped me in all my online entrepreneurial ventures, as well as helping other people who kind of get into a lot of these ventures and they don't necessarily know the business side, or they don't necessarily know like, hey, I have a ton of success now, what do I do with this, right? And what does this mean to invest, and how can I grow my wealth while actively pursuing my mission, whether I am the founder and leader of a company, whether I'm some mid-level person at a company, or whether I am just like an online entrepreneur who's just teaching people things that I'm not looking to create the next whatever life-changing company.
Yeah.
So
Yeah. Cool. So obviously today is just a fascinating space on the internet for entrepreneurs. A lot of people are finding extremely creative ways to make money. We talk a lot about Web3 in this show and all the new markets that's going to create for entrepreneurship. So in your career, like let's just take the last 20 years, where have you seen, either yourself or people that you've worked with, where have you seen the types of markets, the types of entrepreneurship, thematically at least, or feel free to get into details, just to get an audience a sense of the types of entrepreneurs that we've been hanging out with the last couple decades here?
yeah, so like for the most part, what happens today is honestly, it's amazing, and I think it's taken for granted,
Yeah.
especially by people who are in their 20s or maybe even early 30s. The speed at which things change, if you even just look back the last 5-10 years, even 5 years, like the changes that happen so rapidly. I mean, even if you look at the crypto, Web3, the blockchain stuff, go back to 2017, right? We're not even talking 5 years ago, when we had the last, let's call it, bull market for crypto, and Bitcoin was touching 20,000, and the number of people who actually had heard of it then was fractional compared to today. And even today, we're talking about the average person probably still doesn't even know what we're talking about in
Right.
these kinds of things. So like the speed is totally different. So when we were investing, like when I was doing venture back then, you were talking about business as services, right? So SaaS wasn't even like a common household word. It was, business services was like a much more common thing. And we actually sold, one company to Sun Microsystems. We sold another to Google. We had another company sell to a company called Mercury Interactive. Now, I think Mercury Interactive ultimately got rolled up by Google, and like a number of these companies that just don't exist, right? Like Oracle has been around for a long time. But like Sun Microsystems, like most people were like, I don't know what you're talking about. Like, and these were the bellwether technology companies of that time. Whereas like Salesforce now just goes out and buys things like at a whim. And not to say they make bad acquisitions, but the valuations and the numbers that you're talking about back then to today are just totally almost like inconceivable. If you told somebody, right, like that the market leaders, call it Amazon, Apple, Microsoft, that they would be, $1 to $2 trillion in market cap, right? Like those things that sounded insane.
Yeah.
Whereas like, now a unicorn of $1 billion valuation for a private company, or a IPO at $1 billion, it happens all the time, right? Like now it's like a decacorn is like the new like target. Right. You got to get to 10 before it becomes like, accepted. Right. So the entrepreneurs then, I don't know if they necessarily didn't have the same vision, but I think because the world has shrunk so much due to technology, like accessibility has shrunken so much. Like, I've said in the past that I tell my kids that what would have taken me a year to actually research and learn and find the information that I needed, you could be done in an hour today and have it, right? Like between YouTube or just searching Reddit or searching Discords, like these things are crazy relative to what we had. And so from a wealth building perspective and a business building perspective, like what you can accomplish, like what you can dream is so much bigger today than what you could have dreamt 20 years ago.
And that's key. I mean, in my own story, I mentioned this even, I think in the previous episode, is that once I realized when I learned how to write code to finish my doctorate thesis, and I applied that to start building web applications, mostly for information purposes. Like a lot of it, I did it a Web 1 way. And then as I evolved, I did it in kind of a Web 2 way. I collected information from from users and created little communities around these different niche markets. And then those communities were able to help others make buying decisions. So it kind of created this marketplace of information so that people could buy things in a safe and compelling way online. Like just the process that I went through to identify that, hey, this is something that can make me money while I sleep. Right? There's a lot of people in the 2000s doing something similar around just website, SEO, rank,
Yep.
sell stuff, right? That was sort of a playbook that a lot of us played back then.
Yep, totally.
And you know, people have written books, and there's been all this conversation in the last 20, 30 years about like how, especially the last 20 years, about how to kind of have an independent track for wealth creation outside of your day job. And, you know, a lot of popular books like The 4-Hour Work Week, et cetera, have spawned this idea of having muses, having side businesses, having different sources of income. Fast forward to today, now there's markets everywhere, and lots of different mechanisms, and people inventing new tricks, new playbooks to generate wealth. So for all the people, a lot of people listening in their teens or in their 20s that are entrepreneurs, and it looks very different. What would you say to them with regard to your past and what you do today? What should they be thinking about as they start having the like, whoa, this is actually working?
Right.
What do I need to do? What do you say?
So I'm personally a fairly big believer in diversification. So, you know, like there's a lot of these quotes now on social media that you see, like, you know, you need seven sources of income to every millionaire has like 7 streams of income or that kind of thing. And the first thing I tell people is like, most important is to really understand the difference between active and passive,
Yeah.
right? There's this like concept out there, oh, passive while you sleep. And it can be passive while you sleep, but like get a really clear understanding of like how passive is it.
Yeah.
So let's use like real estate as a good example, right? So I invest in, let's say, a 200 unit building where I am not the operator, right? Like my day in and day out life is not to operate the building, not to underwrite the transaction, but actually to understand what they're doing. But after I do the analysis on the front end and I write the check, I'm moving on, right? At that point, I'm just collecting quarterly, monthly, whatever the distributions look like. And I know what the plan should be. I know how they're going to execute, and I can get check-ins as needed, right? That's in a passive way. But if someone says to me, hey, why don't you go buy a single family home and you can rent it out? Now, granted, again, Airbnb has totally changed that dynamic for short-term rentals. But if people say to me, hey, should I go buy a single family home? Like, know your market. Like, do you want to be a landlord? Do you want to fix it up? Right? Like HGTV made it that everybody wanted to go buy a dumpy home, fix it up and flip it. Right. And I'm like, I'm not a carpenter. Like, and it doesn't interest me. And so like, that was never something that really was something that was on my radar. But regardless if it's for you or not, understand that that's much more of an active role. Like if you are coding for a website during your day job or your life, because that's what you're building, understand that you're going to have to give something to be able to go search for that home and what have you. Yes, there are things you can outsource, but certain things, like even if you outsource management and you outsource underwriting, you outsource, at a certain point, like how much money is left for you? And B, how much time are you now managing the outsourcing? And so understanding like just key distinction between truly active and truly passive, or how active, you know, trading stocks or options and stuff like that. How much time are you spending on this? How much research do you have to do? And then how glued to your screen do you need to be? So is it day trading? Is it swing trading? Is it, you know, what's the difference? All these implications. Same with crypto, right? Like crypto is basically a new stock market, so to speak, you know, to simplistically look at it, right? Like there's, you know, utility of some of the coins, there's value in some of the coins, there's projects, same with the NFT side. All these different things are amazing, but how much time do you have to dedicate to it? And how passive is it going to be? And how deep do you actually want to understand? So when someone says to me, hey, what should I do? I'm like, I am a pretty big believer in having diversification. Like I'm in crypto, and even like my parents who are obviously older, I want them to have 1 to 10% of their net worth in, you know, cryptocurrencies or NFTs or things of that nature, because there's true value. Now, are we still in the early days? For sure. But if you're 20 years old and you have a different risk profile,
Yeah,
and you're
right.
like, hey, I can take that risk. I'm willing to wake up to a 20% down number on my iPhone because whatever my app that I use is telling me that. Okay, understand that the volatility will be there, and you may make money, may not, but understand like, hey, will you feel bad about that or not? Right? Like most 40-year-olds will feel pretty crappy when they wake up and the market's down 20%, like just inherently, because at that point in their life, they probably have certain expenses, they probably have certain responsibilities. As opposed to a 22-year-old probably doesn't have the same expense line, and he probably doesn't have the same responsibilities. I'm not saying he wants to lose the money, and I'm not saying he should lose the money, but he definitely has a different mindset around it, he or she. And so I don't mean to say like, hey, anybody can, lose money and it's cool, but it definitely understand that you have time, right? Like that's the whole thing of like the compound effect, right? If you take time, and even if you're putting up a 7, 8, 10, 12%, and you have 20 years, you're going to have plenty of money. Now, we probably could spend the whole episode or 5 episodes on what the value of fiat dollars are going to be in the future, and what does it really mean, but like not even going there, right? Like if we're just looking at return basis, you don't need to be the life of the party and tell everybody about your greatest home run. You could still be super wealthy by just putting up like a 10 spot or a 20 spot every year, doing safer things.
Yeah. Yeah. Like the other day, I was just going to the kitchen to grab an apple or something, and my 15-year-old son, it's like in parenting, you never know when these questions are going to come. But my 15-year-old said, "Hey, Dad, uh, what should I invest in?" I like stopped. I'm like, "What?" Like
Yeah.
that's a big conversation. Grabbed my apple, took a couple bites, and I'm like, "Well, um, first of all, I'm glad that we have some time to talk about this. That you're not, hopefully, not leaving the house anytime in the next couple of years here." But I said, the way that I answer it, and I'm curious to get your answer. The way I answer it is, I said, well, Charlie, there are assets out there that you might be able to invest in. There are things. There are stock, cryptocurrencies, commodities, all kinds of different financial instruments that will allow you to essentially bet on something that you think is undervalued in a market, and you think that that's going to go up. Now, some things are super volatile and have a huge risk profile. Some things are maybe safer, low volatile bets. And I think he understood those concepts. And so he was kind of like, well, what do I do? And my answer was, well, go find the things, go do some research on whatever you're interested in. And if you think that that thing is going to go increase in value, then set aside a certain fraction of your net worth and invest in that. I'm curious, how do you approach that conversation with either the 15-year-olds or the 20-year-olds of the world that are just asking these questions?
Yeah, no, totally. And I think it's it's good for you that your 15-year-old's asking that. Like my 15-year-old asked me a similar question, but I think it was a little bit on the tail of overhearing my conversation with my 17-year-old, where my 17-year-old. So for my kids, right? So they have when I got started investing for them, right? Like it was much more standard, the Qs and the S&P 500, so SPY and NASDAQ type of things for the long term for them. But as they started to get involved a little bit, or at least I would discuss it with them, I'm like, listen, let's talk about companies that you either use the products or you've heard of the products and you think long term that product has viability, right? So like one kid's portfolio, in addition to the core portfolio, they have Roblox. And Roblox went public in 2020, and now it's become like this metaverse play, right?
Yeah.
Like it's not just an online game thing. And so, that investment is up whatever 40, 50, 60% or whatever it is. And another kid has Tesla, and another one has Bill.com. And each one of those are up whatever 40 to 150%. But the idea was like, these are things you use and you see some value in it and you believe long-term in the company, right? So the first thing that I wanted to do with all of them was explain the difference between assets and liabilities, right? And kind of have them understand like what costs you money, what makes you money, and what just doesn't is maybe neutral. There aren't too many neutral things, but for the most part, like what each category thing was. And we when they were younger, I used to tell them like, okay, there's a saving bucket, there's an investing bucket, there's a spending bucket, and then there's a charitable bucket. And that's how like we kind of like looked at it. But the saving one really was like usually either to save to invest or save to spend. So that was like a hybrid. So it was really like three buckets, with the fourth one is like a flex.
Mm-hmm.
And it's funny, I say flex, and with my kids, T4 flex, I have the wrong word, but like, you know what I'm saying? It's like, it's an option play. Like, think of it more like fantasy sports, right? You're tight end, wide receiver kind of guy.
Yeah.
And so they all understood, like, okay, each one does a different thing. So if they want to buy something, they're going to save up to be able to spend it later. And the category for investing was for the future. The thing with them is that, like, explaining crypto to the teenagers was a lot harder than I think the 20-year-olds and above. They get it a little bit more, simply because I think the way I explain it to the kids is, I'm like, hey, listen, how does it work today? We put our money in a bank. The bank is a centralized holder of things, and they technically tell us what we have there, right? Like, we deposit, and they are the record keeper. When you get older, that is not going to be the case, right? Like, decentralized finance is a real thing, and we don't necessarily need that centralized holder. And so we're in this point where we see the future. We're not sure when and how it's going to get there. It may not actually look exactly how we are starting to see it, but the idea of like a Coinbase or Kraken and all these things, like, that's almost like a stopgap if you really think about it, because that is a centralized exchange, right? Like, that's not that much different than Schwab, TD Ameritrade, all these guys, right?
Right.
But it's the on-ramp. We couldn't make the leap without that stepping stone, so to speak, right? And so that's how I've explained it to the kids. And so they're like, okay, so why do I buy a coin? What is going to be the use case of it? And I'm like, well, that's a great question, because is it a stock, right? Like, are you owning like the business, or are you owning the utility of, like, right now you need Ethereum to send something from one place to another, right? And so it's a little bit conceptually harder for so some of the kids I'm like, who've asked me, like, I actually am teaching even now in high school. I'm just kind of giving these fundamentals. I explain Bitcoin as kind of like the store of value, right? The gold 2.0. And they're like, okay, so should I put my money there? And I'm like, yes, like, totally do it. And they're like, that sounds scary. What do you mean? Like, just do it. And I'm like, if you're willing to put it in a bank, if we really believe that the future is going to be with, Bitcoin may not be the currency that everybody uses, but it is, because it's the slowest, and there's only 21 million of it, whatever. And so everybody may break into sats and stuff like that. But at the end of the day, like, if you believe that the value will be stored there, at some point it will stabilize. And that will be against, let's call a hedge against inflation. Yeah, there's no problem putting there. If you're looking for like long-term upside, that may not be the best bet, because it's not going to probably have another 1000x from here, maybe, but high likelihood there's another coin or use case that will. And so I kind of try and frame what are we trying to accomplish? And this is why I tell anybody, regardless of age, like, start with the end in mind in the beginning. Whether you're building a business, whether you're investing, whatever it is, like, if we want to get somewhere, we need to know where it is we're going, right? So we need the goal. And then we can start to reverse engineer. So if you're looking to take the money and like let it grow slow and steady, or are we looking to be aggressive, right? So do we think Solana is the play for the future? Do we think that Ethereum is the play for the future? Where am I going to make the most money? If that's what I'm after, I'm after the most capital appreciation. Yeah, you can kind of make these decisions. And the truth of the matter is we won't know, right? Like, there's no way to know what the right answer is. Like, I can have an opinion, you can have an opinion. Ultimately, it may not be either of our opinions, right? And so with these different things, like real estate, I tell kids, like, if you want to get involved, hey, you want to own a single family home, that's a whole different discussion than someone who's looking for more passive income. So like, I try and get them to understand conceptually the assets. That's conceptually correct. Like, are we talking about cash flow? Are we talking about, capital appreciation? Same with businesses. If you're going to invest in a business, if you're going to run a business, understand these things. And so then once they kind of start to feel it out, like, they're going to make mistakes. And that's the best thing, right? Like, I would say, like, if I look back at my 20s, like, even in early 30s, the thing I wish I did more of is did the thing, whether I did it right or did it wrong. I wish I did the thing, because I can read a book, I can watch a YouTube video, I can, but the amount of knowledge I get is so different than the second you put that money in the Meta wallet or,
That's right.
the MetaMask wallet or whatever it is. You're like, holy crap, I sent it to the wrong place. I just lost $500. Okay.
Right.
But now you know not what not to do, as opposed to like, hypothetically, what should I do? Right. And it's the same with business. And so that's where I think like the thing to do is to just do the thing.
Do it.
And you make a mistake, fine. Make sure you learn from it. But you gain so much more. Like if you're going to go buy Dogecoin or Shib or any of these things, like, okay, I'm not saying that that's what you should do, but experience it. Like use a little bit of money. Understand that there's costs to this, but it's an education. It's a whole lot cheaper than some of the other ways to kind of learn some of this stuff.
I like that quote you just did. The thing to do is to do the thing. We'll get that on a billboard somewhere.
Excellent.
So there's one more category of spend that I don't know. It was quite a nuance. And this is the life of an entrepreneur. This is a category we think about a lot, right? Which is investing in ourselves.
Yeah.
And this is a question we get a lot, which is at what point do I invest in myself? At what point do I actually quit the day job? How do I think about allocating X amount of liquidity to bet on my ability to go and build assets and cash flow, et cetera, et cetera? How do you help? I guess that's two questions. One, how do you answer the, like, how to bet on yourself? And then two, specifically for the entrepreneur out there thinking about quitting the day job, how do you navigate these conversations with folks?
Yeah, no, those are great questions. So number one is I think entrepreneurship. So, probably when you and I were starting out in our careers, like it wasn't even a word. I mean, it was a word in the dictionary, but it wasn't like if someone said to you, hey, what's your, what do you want to be? Like, it was never, oh, I want to be an entrepreneur.
Right,
no, like, right. Maybe somebody said I want to start a business, or maybe I want to work for myself, but like, it was not a commonly used word. Whereas today it is, right? And I think part of that journey is, personal development and mental fortitude. And so if you want to get into entrepreneurship, I actually think you have to be able to bet on yourself all the time. You have to feel confident that you're going to do it. You may not do it today, you may not do it tomorrow, but whatever it is you're trying to do, you're going to get close, you're going to get there, whatever it is, right? And like all these like sayings that like sound cliche, a lot of them are kind of true, and you have to know yourself. So in terms of like investing in yourself, it's a very important thing to be able to invest in skill set and the knowledge. And so no matter what you're doing, the first thing you need is a skill, right? Like when people kind of like leave the full-time job, they either have a skill that can be monetized on their own, or they have to go learn a skill that can be monetized. And so a lot of times what you see is like the done for you model. So let's just use an example. Let's say I was really good at Facebook ads, right? And I'm like, I learn it, I want to put into place. How do I go monetize that? I go and try and get clients, and I'll run their Facebook ads for them. So that's like the done for you, like almost like an agency model, right? Quote unquote. And if you take that and you're like, okay, well, this doesn't scale super well because I either have to hire employees or I'm trading time for money, right? So if I'm going to build a business on this, either I have to now have a product or I have to have people, right? That's the only way I can kind of scale it out. And I think the first thing you have to do is say, okay, how good is my skill set of this skill that I want to monetize? How good is it, and how confident am I in it? Or do I need to invest more into myself to do it? And so I go back to the prior saying, right? What's the thing to do? Just do the thing. And so try it, go out and do it. And so when I was starting, like side hustles were not even a thing. It wasn't even a word, but like you had a night job or whatever you want to call it, right? So here, like if you have a day job and you have security concerns that you loss of income or whatever it is, start to just do the Facebook ad or do the Amazon or do the crypto investing or do the core development if you're a programmer, whatever it is, at night on the side in your free time, and see how you can develop that skill. And then you can totally, be monetizing it. But if you're like, hey, I like my thing, but I want my money to work for me, and it's not necessarily going to be a side hustle that's not active, right? It's more of like, hey, I want the money to work. Then it's like, okay, now I just need to be educated in investing. And you don't have to know all the things, right? Like you don't need to be in every single thing. I don't need to know everything about everything. if I can find like my one or two things that like I feel comfortable with, I can be rich. And it comes down to like, where do I feel comfortable as opposed to what am I comparing myself to, right? Like, is it about the house? Is it about the family? Is it about the future? Like, what is important to me, irrespective of what social media says, irrespective of what my neighbor's doing, irrespective of these things. And that kind of goes back to the mental fortitude thing, like being confident and like, hey, it's okay. I have $2 million in the bank, or I have $2 million in assets, in cash flowing assets. I don't care that guy's got 10 million, or I have 10 million. I don't care that he's got 50. There's always going to be somebody with more.
Always somebody.
So, being being okay with where you are, or knowing where it is you want to get to, why, is probably mentally some of the most important, components. And so you'll learn a lot about yourself. So I think always investing in yourself from a development standpoint, education standpoint, is very, very important. Even if you don't go to college, like taking courses, meeting people, whether it's paying for networking, paying for access, there's a cost for some of these things. Now, tons of people will do it for free, right? Like we're having a conversation on this podcast, people get this free value. That's amazing. But at some point, if someone says, hey, Will, I want to get your ear once a month, right? Well, you're like, maybe I could do it, maybe I can't, but maybe I create a program where people can pay to be a part of it. People are like, nah, I don't want to pay. Okay. So that person is going to have to take the path of like looking for the free content, which is out there. And if they're like, no, I want to pay for access, they will grow. They will develop faster than someone who doesn't necessarily pay for it. So I think when I categorically, say, okay, do we invest into buy things? Do we invest into, do we put money aside to invest in charity, all these things? The investing component can be in yourself. The way I like to think about it is if you have a business or even a side hustle, okay, think of your P&L. So this is your business P&L and all the financials. So for anyone listening, there's 3 financial statements in a business. There's a profit and loss, which could be called an income statement. There's a balance sheet, which lists your assets and liabilities. And there's a third one called your statement of cash flows. The cash flow statement basically tells you the money that comes in, the money goes out. Where is it coming in from? Where is it going out from? And most people don't know about that third one. Actually, that's how you value a business. It's one of the more important ones. But that aside, right? When we look at the business, they have the 3 statements. On your personal life, you have those 3 statements as well. No one really thinks about it that way. So if you have a side hustle or a business, the money has to move from the business to the personal side at some point. So if you're going to invest for wealth creation, for the growth, it's going to end up on the personal side. It's going to come out of the business and it's going to go on the personal side. So I tell people formulaically, if you want to think about this at a very high level, after you've paid yourself a salary, after you paid your employees or any cost of goods sold, after you have made sure that you've saved for taxes, right? Whatever is your true net profit, I would say 70% of the business of the money can come out of the business if you want, and 30% can go into your personal net worth kind of growth. The money that stays in the business can be reinvested to grow the business, or it can be reinvested to grow your skill set, you as the entrepreneur. So that investing typically is going to take place in this business side.
Yeah.
Now, if you're a person who's just a W-2 employee and you're just on this, hey, I work for someone else today. Okay. So think about it the same way, like carve away 10 to 20% to invest in yourself if you want to break away from this, or 10 to 20% because you're like, hey, I don't know investing and I just want to be able to invest the money. Like there's let's call it a gate that you want to enter through. And lots of roads. I live right outside New York City, right? I want to get into New York City. There's bridges everywhere, tolls everywhere. Everybody, tunnels. Everyone has a toll in front of it. Right. And like, I'm not saying there's no way to do it for free, but a lot of times it accelerates your experience. So investing in yourself I think is always something that people should be doing it, no matter what age and stage that they're at.
Yeah. So what you do is super admirable and incredibly important. I want to make sure the people watching, most people listen, but I want to make sure the audience understands this because this is absolutely critical, right? You're teaching in high school, you said, but before we hit record, you mentioned you advise people in a non-traditional way. And I think this is really important for us to dive into. So let's say for the entrepreneur, they have X amount of wealth, it's growing. They then inevitably get hit up by all the wealth managers, all these different people that are trying to sell them. They're like, hey, come park your money with me because I'm awesome and I'm going to help make you a bunch of money. Can you help educate right now? Can you help
Yeah.
educate the audience? What are you going to get hit up with, and what is
Yep.
a smarter way to proceed?
Totally. Okay. So, and we did talk about this. So, for the benefit of all of your listeners, right? The financial service industry is fragmented, and it is also not self-serving, but it is definitely driven by some sort of commission of sale, right? In the sense of like, no matter what I do inside the financial industry, I am I'm incentivized to have you do that thing. Meaning, let's give some examples so there's context here. If I sell life insurance, I'm going to tell you, right? Like the most important thing for you and your family is to be insured for life insurance. Now, I may be selling you what we call term life insurance. I may sell you whole life insurance, cash value. I may sell you something called variable life insurance. But at the end of the day, depending on where I work, I may be able to offer you all of these things. I may only be able to offer you one or two of these products. So I am product driven, and I'm not necessarily looking out for your total benefit. I'm not trying to be malicious, but at the end of the day, like I only get paid if you buy the things I can sell, right? So if I work at Edward Jones or Merrill Lynch and I say, hey, you have all this money and now I can help you grow all your money. Well, let's break this down for a second. What actually can I do? Right? I work at Merrill or Edward Jones, and nothing, no knocks on these firms, but these wealth managers or these advisors, whatever they are, they manage your money. What does that mean? That means they're going to ask you to give them your money to put it into X mutual funds, X hedge funds, X stocks, whatever it is. And they're going to get a percentage of the assets that they manage. So let's say you have $1 million, let's say you have $100,000, whatever the number is, they're going to get a fee based on that. And the idea is that they're like, hey, our incentives are aligned, because if your assets go up in value because I put you into good investments, my fees go up too, but you're growing and your wealth is growing. But they're limited to the products they can offer you, right? Like if you want to get into this real estate apartment deal, sorry. You want to buy a laundromat, sorry. You want to get into other cash flowing assets, you want crypto, they can't do these things for you. And they may tell you, oh, those are good ideas, but they can't offer them to you, and they can't now look at the whole picture because they're busy focused on the vertical that they focus on. And the financial service industry, right? So when you start to, like, you put on your LinkedIn, I'm the CEO or I'm the founder of whatever, next thing you know, you got messages from the guy at Wealth Management XYZ, an insurance company, and it may be like this confusing name, right? Like it's not a brand that you've ever heard of, and you don't know, are they trying to sell me life insurance? Are they trying to put me into investments? Are they selling me on some angel deals? I don't know, right? And so the thing that what I really try and help, specifically entrepreneurs, because most entrepreneurs, when they see success, they're hit up everywhere. And so they typically don't have a good, strong finance background. And it's not a knock on them. It's just like they've accomplished their mission, which was to build this business or grow this business. Or even if they're not looking to change the world, but they're doing their thing, right? They can't know all the things. And my view is like, hey, I want to be your offensive coordinator, call the plays for you based on what fits for you, right? We talked about like risk profiles, right? Like someone who's willing to risk it all versus not, right? Like the angel deal that it's zero or hero versus, hey, let's, kind of like own some Johnson Johnson and Apple stock that we know that like we may not hit it rich, but we probably will be okay type of thing, right?
Yeah.
And understanding like what their fears are, what their goals are, and then say, hey, okay, listen, these are the things you should look into. I don't want to manage your money. I want to show you opportunities. I want to show you all the different things. But at the same time, like I'm not incentivized one way or another. It doesn't, I'm unfazed and unincentivized for you to invest in this real estate deal or to buy that stock or to get life insurance. I want you to have the things you need and to understand them. Because the truth of the matter is life insurance like is pretty complicated if you go into anything other than term life insurance. Term life insurance is pretty straightforward, right? It's a 10-year, 20-year, 30-year policy. If you pass away in that period, your family gets a payout. If you don't, it was an expense and it's over. The other ones, you don't necessarily, everyone sells you a different solution. Like there's tax-driven strategies. There's what we call like be your own banker, infinite banker strategies to use as a vault or a cash mechanism. There's things that are tied to the stock market. And each guy is like telling you his path and you're like, oh, I don't know what's going on. And you shouldn't have to, right? There's no reason for you to know all the things. And it's the same with the guy who's telling you about the stocks and the mutual funds. He just wants you to get into those things, not because he's a bad guy, but he can't offer you all these different things. So that's my knock on the financial service industry, that it's kind of limited. And it's really, it's a shame because the entrepreneurs who, whether they're seeing massive success or just a little success, they shouldn't feel like, someone's trying to swindle me, or I don't know what to do. And they also shouldn't feel like they have to have that home run status in their investment portfolio. If they're doing well in their business, right, their active income, you just want what you're throwing off from that to grow. And it doesn't have to be that like you back the next Facebook and the next Google and whatever else the next big company becomes, right? So that's kind of like my, I don't know, minute and a half rant on the whole
Yeah, no, that's good. Okay, so tell us about your firm. Like this, I'd love for the audience to know about you. How can they get a hold of you? Like, what's the pitch, and how do we get a hold of you?
Yeah, sure. So you can follow me on Instagram, Aryeh the Businessman. That's my Instagram handle. I'm on LinkedIn and all these other platforms as well. The solutionadvisory.com is one website that probably has like a good way. It's really like 4 quick questions about yourself that allows you to like, it gives me a good quick snapshot in terms of like understanding you and potentially set up a call. I did a joint program course called Future Fund that we're really teaching entrepreneurs first how to kind of break down their numbers and understand like what they should be personally investing. So that's like more beginner based, but solutionadvisory.com is probably the easiest way. And Instagram, my DM, Twitter, all these things, like my DMs are always open. And so I'm happy to chat.
That's amazing. Well, appreciate it. Any final words for the entrepreneurs, the investors listening in? Anything, any parting words of wisdom?
I would say, we talked about it, but I think the parting words are that time is always, on your side. Like if you have time on your side, you can make mistakes, whether it's in business or investing, right? So understand your big picture and kind of start to think about like in a perfect world, where would you want to be and what do you want to be really doing, both with your time, your family, your interests, because that's probably the easiest way when you're thinking about putting money to work. It starts to allow you to take shape of like, what's really important to me? Do I really want that big house? Yes, I do. Okay, so that's great. Or you want that expensive car, you want that watch, fine. Or no, I want the experiences with people or family or whatever it is. Like, and that will allow you to start to say, okay, I'm going to have this money for this experience and this experience or that house. And you'll start to have a plan. So I think always like, I know it sounds like boring, but like having a plan really just helps you kind of get through even your day-to-day.
Love it. Aryeh, hey, really appreciate your time. Thank you.
My pleasure. It was great talking to you.
All right, a couple quick things before you go. Number 1, I have a general newsletter where I write about technology and startups and health science and teaching people to code. And I write about a variety of different subjects that we talk about on this show. So if you go to wclittle.com, there you'll be able to subscribe, and you'll also be able to subscribe to particular topics. If you're just interested in one or a few of them, you'll be notified right when I publish new content in those areas. Number 2, my partners and I at Proto Ventures have a portfolio company called Startup Rocket. If you go to startuprocket.com, there you'll be able to receive coaching guides and customize an operations framework for you and your team and your advisors to be on the same page in terms of what is the appropriate next step for you in your entrepreneurial journey. And finally, if you wouldn't mind leaving a review anywhere that you have listened to this podcast or watched this podcast, it'd be super helpful to help those who might be interested in consuming this content as well. Thank you.